So what is up YouTube? In today's video, we're going to be talking about an EV Spac stock that's been gaining a lot of traction and it's been showing in its stock price. So the Spac stock that I'm talking about is CIIG and it's merging with the EV company Arrival to make it public. CIIC is up over 34% today and up over 180% this month. So I'll be talking about whether the stock is actually worth buying or not. So like I said before, this merger is between CIIC or CIIG Merger Corporation and Arrival. So Arrival is in the commercial space for electric vehicles and they plan on releasing 4 vehicles by 2023. So currently Arrival didn't actually start producing any of their products. However, their first product is expected to start production in Q4 of 2021, and this is the electric bus. Their second product is the electric van, which they're planning to start production in Q3 of 2022. So the electric van is a delivery van which companies like Amazon or USPS use. It is similar to what Rivian does or Workhorse, but I'll be talking about pre-orders and competition a bit later in the video. Their third product, which they're also planning to roll out in Q3 of 2022, is a large electric van, and I'm guessing this is just a larger version of the electric van in 2021. The fourth and final product which is listed is a small vehicle platform, and they're planning to start production of this product in Q3 of 2023. So let me just reinstate the timeline. In Q4 of 2021, they're starting production of the electric bus. In Q3 of 2022, they're starting the production of the electric van and large electric van. And in 2023, Q3, they're starting production of small vehicle platform. All these vehicles are expected to be autonomous, and in terms of pricing, they're very competitive to ICE vehicles. And their margins for these vehicles are pretty high, which I will be talking about a bit later. But overall, I just want to say the vehicles look very cool compared to its competition. And I will be comparing Arrival's products to the vehicles of today a bit later as well. But before that, I just want to talk about why Arrival can keep their margins high and why investors are very interested in this business. And I'm talking about Microfactories and how Arrival is using it to its advantage. So Microfactories are just smaller versions of factories, but they're a lot smaller. Let's just take the example that is given on Arrival's investor presentation. So let's just say there are 10 Arrival Microfactories. This will take about 200,000 square meters of space. However, a traditional factory, let's say from Volkswagen, would take around 2.2 million square meters of space. However, even though the 10 microfactories are a lot smaller, they could still produce the same amount of vans. And the amount of money to set up the microfactory and to operate it is a lot less when compared to a traditional factory. It also takes a lot less time. Another interesting thing is that Arrival's microfactories can actually make all 4 of the products, which means it doesn't need different microfactories for a different product. However, I do have some concerns about the microfactories. One concern is that microfactories aren't proven yet and no huge company actually uses this. And another concern is that I'm not sure if Arrival will be able to scale with microfactories. But using microfactories is how Arrival plans on keeping their margins relatively high for their products. So let's see how their products actually compare to existing products on the market. First, let's compare the pricing of the Arrival van to diesel vans and competitor e-vans. So the Arrival van is a 17% price improvement compared to a diesel van, and it's a 28% price improvement compared to competitor e-vans. Now let's look at the Arrival bus in terms of pricing. So the Arrival bus seems like it's a 47% improvement from diesel buses, and it's a 50% price improvement from competitor e-buses. Now let's look back into the Arrival van and see what it can do and compare what it can do with its competitors. So what we're going to look at is the amount of weight it can carry, the vehicle's weight, and other things as well. And when comparing the Arrival van to the Mercedes Sprinter and Ford Transit, it seems like Arrival is better than both of these products in almost every aspect. And it does seem like other companies do believe in Arrival's product, which is why UPS pre-ordered 10,000 Arrival vans and has the option to pre-order 10,000 more. And this gives the company a potential of $1.2 billion in revenue, but we'll be looking into that a little later. And before we get into the merger details, revenue, or valuation, I want to talk about some concerns I have over the comparisons made previously. So Arrival's bus and Arrival's van will be released in the next 12 to 24 months. Within that time, a lot can change. change. So companies producing diesel vans or buses will slowly transition into electric. For example, the Mercedes van, which is a van that UPS mainly uses, is slowly going to transition into electric, and they already started releasing electric vans. And not only that, existing companies that are making electric vans can also decrease their costs and improve their overall vehicle as they're gaining more traction. For example, Rivian got 100,000 pre-order from Amazon for its vans. So as volume increases for Rivian, they could probably decrease the price for their vans, and they could spend more on research and development, which will probably make it comparable to Arrival in the next 12 to 24 months. And this might be the case for a lot of companies that are already manufacturing electric vans. So my main concern is that competition is going to increase over the years, and they can also probably make their vehicles comparable to Arrival, which is why I don't like the current comparisons they made. So now let's talk about the merger details, revenue, and valuation. So first, let's look at the revenue projections. So they're first expected to make revenue in 2022, and in 2022, the expected revenue is $1 billion. In 2023, it's expected to be $5 billion, and in 2024, it's expected to be $14 billion. And majority of the revenue will come from sales of the Arrival van. And a lot of the revenue projections is based on a pre-order they got from UPS. So this pre-order is for 10,000 units of their Arrival van, and they have the option to buy 10,000 more. However, this pre-order can be cancelled. And their revenue projections are not just assuming UPS will take the first 10,000 units, but they'll buy another 10,000 units. So they're assuming UPS will buy 20,000 units of their Arrival van. And personally, I think this is a bit too optimistic because UPS usually uses Mercedes vans. However, they're trying to keep a green image, so they're moving towards more electric vans. However, now that Mercedes is planning to make electric vans, they might decline their pre-order on Arrival. However, they might take it as well. So the merger is expected to close during Q1 of 2021, and it's being done on a pro forma valuation. So if the stock CIIC, or also known as CIIG Merger Corporation, is $10, then Arrival would become public as a $6 billion company. But now that CIIC is close to a $30 stock, if Arrival were to become public today, it would come out as an $18 billion valuation. And I think the valuation is extremely high for a couple of reasons. One reason is that this company won't have any revenue until 2022, and another reason is that in its last seeding round, Arrival was valued at $3.3 billion. And I think the reason why Arrival chose to become public now is because they knew they would be trading at richer valuations. So am I buying this stock right now? I'm not going to buy this stock for a couple reasons. One reason is that no product is yet to hit the market, and it seems like there's no customer feedback yet. Another reason is that this market is starting to get really competitive, with older diesel vehicle makers starting to move to electric, and electric van makers starting to become more prevalent. And another reason why I'm not investing in this company is a lot of the revenue projections are based on the UPS deal. However, that can be cancelled. And I think they're being very optimistic with their revenue projections. Another reason why I'm not investing in this company is because their valuation seems really insane right now, with an $18 billion potential market cap and no revenue until 2022. And if you are in an EV bubble, the stocks that will be hit the hardest are the ones with no substantial revenue. And I already have two stocks like this in Hyliion and Workhorse, so adding another one is just not worth it. Overall, I just don't think the risk reward is worth it, paying such a high premium and waiting for revenue for the next 2 years, and especially just counting on a UPS pre-order which could be cancelled at any time. And if you are interested in buying this company, first look at its competitors in Workhorse and Green Power Motor and decide whether those are better investments or CIIC. And also look at safer EV plays that are making substantial revenue with tons of growth potential, like Tesla or NIO. However, even though I'm not going to buy CIIC now, I may change my mind in the future, and I'll try to revisit this stock right before its merger. And if you guys did enjoy this video, please do leave a like and subscribe. Also comment down below your thoughts on Arrival.